Let's do it.
You're ready. Let's go.
Thanks, guys. Welcome to the FinTech part. Yes. So we're going to leave now a bit the FinTech world behind. We're going to move into the insurance world called Insurance Tech, as we already heard the great presentation beforehand. We have 3 Germans on the panel. You have a South German, a West German, and a North German on the panel. So I hope you will not mind our German accents at all. But 30 minutes should be enough to give you a bit of an insight what happens in the region and also worldwide in this very exciting topic of insurance. So on my right, we've got Johanes from Rabbit Finance, one of the main directors, and leading firms in e-commerce financials. Thanks for joining us today.
Thank you, thank you.
And on the left, it's Philipp, who work with many Fortune 500 companies in the insurance world, and also on the innovation side, and was also part of the MetLife Lumion Lab, one of the insurers in Singapore. Thanks for joining us.
Thank you. And
I'm Markus. I'm co-founder of Startupbootcamp, FinTech, and of a new startup, a firm, Tryb, a growth stage investor in Singapore. Wonderful. So let's kick off. You already heard in the presentation what's happening, a lot of numbers on the slides, a lot of information, what's going on in Thailand. Let's start a bit more global, let's start a bit more general. What do you see, guys, happening in insurance? I mean, it's not the new buzzword. How can you give some substance to this buzzword?
Yeah, thank you very much. So I hope you're not too sleepy here in the round. Now we're moving to insurance. I know it's a difficult topic to make it exciting, but we are very excited about it and hope to share you something of our excitement. Globally, insurance is changing due to the digitalization, and digitalization is bringing in a lot of data that can be used for the right pricing, so give the people the right price, and also allow a lot more people to get insurance at all, because today the penetration of insurance in emerging markets is still very low, and the reason is that we don't have the suitable products, and now this is changing fast with the new digital way.
Thanks. All right. I think maybe there's an explanation for why there's 3 Germans on the panel, because Germans are one of the most afraid cultures in the world. And the nature of insurance is traditionally basically banking on people's fears and appealing to people's fears. What we're seeing, as we just heard, is there is a major shift of digitalization, but more importantly, insurance is becoming more about quality of life and lifestyle and enjoyment of life, and not just about, hedging against fears. So there's also a change in the relevance that insurance has. And if you think about, financial services in general, there's a hygiene level of, things you have to do, but then there's also a level of, kind of more aspirational, more lifestyle services. In insurance, we're a bit behind on that. But that's sort of part of the change in how insurance is going to be perceived, and part of the change in the customer experience, which traditionally is where insurance is lacking a little bit.
So you haven't, digital experience, user experience, the uninsured, few topics. What happens, what are the opportunities within the insurance? What's happening, what opportunities if you are a B2B? What are the inefficiencies you can overcome?
I think there's a lot of opportunity in the insurance market. It's roughly like a 16 billion US market in Thailand, life and non-life. And if you think about alone the motor market is a 3 billion US business, and we're looking into like a very, very inefficient market where all the products are the same price. There's no price differentiation due to the risk. For example, if I buy a car insurance in the Thai market, I'll get exactly the same price as the 21-year-old driver that basically to start. So there's very little risk-adjusted pricing based on who you insure on the car market. It's mainly about which car you insure. And that doesn't make much sense, for example. But the reason is that traditionally, as Clemdy pointed out, the distribution is very much offline, or totally offline. And the offline channels, they cannot do the dynamic pricing, and oftentimes this needs to be very simple so that they can sell. And they don't want complexity, and any kind of complexity, like asking people more questions to make the price more relevant, is actually not in the interest of the traditional distribution, because it will take them more time to sell, and then they can sell less, and it's just confusing people. So that's also the reason why in offline, when you go to a brokerage, they typically just offer you, hey, this is the health insurance that we are going to sell you, boom. And they're not really comparing amongst many options like we can do on the online. The reason is they just simply don't have to, because the guy on the other side trusts this broker so much. They say, oh, you're my friend, I'm pretty sure you have already thought about what's the best one. I'm not an expert. I don't know much about insurance anyway, but I trust you. It's going to be fine. And I think this is the shift in the market is with more information available, with smartphone penetration, with people becoming more literate in terms of what they know, what they need. There also becomes the need of like comparing more the different products and getting ultimately a better deal. But coming back to the opportunity in the market, so all the people that don't have insurance today, so how can we bring insurance to the 60 million people that maybe don't buy insurance yet? And this is a way of coming up with products for the poor, like for the unprivileged, to understand, like to cover them for the main risks that they face in their life. The problem is so far no one is doing it because the distribution costs are prohibitive. So we have to figure out new distribution ways to get to them. When we can do that, there's a land shift of market out there of small premiums but very high volume. But so far no one has figured it out. We are working on that. But so far no one has really figured that one out.
So thanks.
I think
I can tell you're a B2C guy from the way.
I'm more B2C guy.
I was actually a B2B question, but no, answer the B2C way. Very good.
B2B.
I want to actually answer the B2B one
we'll
on that.
Yeah.
So basically what you heard is insurance products tend to be static. This applies to motor, it applies to life, it applies to health insurance. The way it works is we have basically one Excel sheet and the product is the same except for a few variables like your age and maybe a few questions like what you do. In reality, you may not answer these questions truthfully, and in reality your life looks very differently. The amount of information that we have through other sources which are now readily available, it does in no way reflect in the way existing insurance products are designed, which means if we go from a static view of so-called risk, a probability basically, to an actual real-time assessment of what is the risk that this person has in this moment in time, then the insurer is able to offer a much better deal on an individual basis. But it's also going to offer you not a product, but effectively a custom solution that, which sounds like a buzzword, but actually just means you're getting a very unique offering from the insurance company because it's you, of the way you live, of the way that you consume data, of the way that you basically work. And all of this is reflected in effectively a real-time adjusted pricing that's just for you. This is a great way to hook the customer because if there's an offer that's personalized for you, that demonstrates insight about who you are and what you do and your preferences, you're going to be much more open to it. And the problem with insurance is like, there's this saying that, you know, it's sold, it's not bought. I think the main reason we do that is because we're selling a product that's very clumsy and difficult, rather than just giving people the exact coverage that they might want. Like maybe they just have a specific need and they want that covered, right? So on the B2B end, it's not possible because insurers, as much as this sounds weird, we don't have much expertise doing products. We don't actually really do products. We just have an agent force, and then we have other people who help us with the product development. So we need to develop, through possibly insurtech startups in the B2B space, capability to do this new form of real-time, individualized, customized pricing and experience. And that's really difficult, but that's sort of where a lot of value lies.
Now we're talking. Thanks. I do probably quite a few German jokes now. So being German, we're quite critical and cynical. What are the challenges you can see in insurance?
I mean, the challenge is that the last 50 years insurance has changed.
Sorry, in insurtech, not just insurance in general.
Yeah, okay, so the challenge in insurance technology is that insurance technology is dominated by big enterprise companies that bring in very expensive systems that cost millions of dollars and that have a very long amortization period. So coming into an insurance company, into an insurance IT department is a conversation of Oracle and kind of this kind of licenses, right? And coming in with like, hey, here's my SaaS solution that can manipulate your pricing and we can take Facebook interest data in and we can price it alongside from your online. There's like, wow, this is like Wikipedia, I don't know what you're talking about. So so that's the main challenge is actually the IT thinking inside the insurers, which is very traditional and rightfully so because today we can do a lot more IT with a lot less people because everything is like modularized and SaaS and you can pretty much give you an example. We are looking into finding an operating system to offer some of our own insurance products to the Rabbit card holders, right? So we want to give free accident insurance to all Rabbit card members. So that's my mission, right? And So how do we do this? Oh, we need a whole operating system for insurance. So we looked into the market. We found anything from like 3 million US to like 10,000 US. And the 10,000 US does almost the same that the 3 million US. The problem is in a insurance world, the 10,000 US would never get approved by the board because it's not traditionally enough, it's not sophisticated enough, maybe there's some, like basically it doesn't cater to the same audience. So long story short, the IT and the whole management mentality here needs to change first before startups even get a chance to go into a conversation with the insurer because they're very risk averse.
Thanks. I have to say, your rabbit is very distracting. I'd rather look at the rabbit rather than listening to you. But it's good. So sticking with you, so besides your own company, obviously, what other models exciting you can see at the moment in the market? What other companies can you name, particularly now we have got the bigger picture, can you point out models or maybe even companies you think are doing something quite innovative and maybe even disruptive of the insurance world, insurtech world? Besides Rabbit. I mean, you're great, but...
So, there's, I mean, generally, I think distribution channels, existing channels need to be used to bring down the costs. So, for example, AIS is doing something very interesting, bundling accident insurance with any SIM card that's coming out. So that's a very effective way to get to people and in inexpensive way. Some people try to sell microinsurance from these vending machines outside 7-Eleven where you just throw in like 20 baht and you get like a month of PA coverage. I think that's with Tune insurance. Other people trying to do usage-based insurance, so on and off insurance. So Thai just launched a product to do turn my car insurance on when I drive, and when I don't drive, it's not on, so I save. So I think those are innovative ideas, but the problem is that the 90% of the distribution, the banks and the brokers, they don't really take those ideas in because, again, it disrupts the 5,000 people call center. Imagine you want to bring such an idea, train it into a 5,000 people call center. No way. Like, I would also not do it. So pretty much, there's a lot of innovative ideas, but the question is how can they come to more scale? And I think it's only possible through existing distribution such as mobile phone operator, Rabbit cards, banks, and so on. So I think the big guy's still going to be the distribution channel, but we have to innovate the way we distribute inside those channels.
Thanks. Any big names, any companies from seed to later stage? I mean, Oscar is a very big example in the States. They're one of the unicorns now. Yeah. What other names come to mind?
Well, one that I want to mention is called Sweatcoin. They're a seed-funded venture in the UK, and they achieved their annual customer acquisition target in a single week. What they do is they turn your steps into a cryptocurrency, and then you can use that to buy health-related goods and services. So you walk, and as a result, you basically get currency, and you can spend that on healthy things. So they're building a form of healthy economy. The reason it's amazing is because every step you take, you get a small reward. And the big problem with sort of, any form of activity and behavior change is that you need sort of instant gratification. You need to instantly feel like that you're engaging in activity and that it's rewarding you on an individual basis. Because it's hard to sort of go from, a bit lazy and a bit complacent to extremely active. It needs to be done in small steps. And insurance companies, and they have loyalty programs aplenty, but they're very clunky and they're not engineered to just give you a simple solution to live a little bit better. This is a hint that imagine we have all the data available in insurance right now, right? We know, like, there's social media context, we technically know where you are, we technically know everything about you, we can tell much more about you than just your demographic and your gender. There's a lot of lifestyle information. So assuming the insurer already knows all of that, it's not the case today, but at some point it will be, right? And at some point we'll know all this information. The only remaining uncertainty is people's individual decisions. Whether I'm going to take the BTS today or walk, whether I'm going to have an ice cream or pad thai, it doesn't matter. Every single decision is the only remaining risk because that's what people do of their own will, and technically we can't tell them to do something else. It's their choice. So the real big opportunity in insurtech is actually behavior change. And Sweatcoin is a great example of doing behavior change. Because if you can influence behavior, of course, your risks improve. And people will appreciate it because everybody wants to change their behavior. Everybody has New Year's resolutions. Everybody has ambitions and targets. And if insurance companies can become a partner in helping you achieve those, that's powerful.
I told Philipp before not to waffle because we know each other quite well. So stopping you here quite now, what do you think then of social pressure of peer-to-peer models that are coming up?
The nice thing about peer-to-peer insurance is that basically, you know, if you live in an apartment, right, and you pay together with your roommates, right, you're probably going to watch your usage because there's a social contract between you and your roommates. You overall want to keep the bill down. But the problem with insurance now is I don't have any relationship to the other people who are in my risk pool. I don't even know them, right? Nobody tells me. My insurance company doesn't tell me these are the other people that are in the same risk pool. So I have no social contract or obligation to, you know, spend less on my healthcare or spend less on, you know, kind of my claims. I have no incentive to do what's right so that basically the overall costs are kept down. The disruptive thing about peer-to-peer is that if I actually know the people who are also in, you know, my insurance contract, just like the mutual started out in insurance, and that's kind of the origin of our industry, I'll be more responsible about what I claim. Right? If there's one coverage and everybody draws from that same coverage, I'll think twice whether I'm going to cover or whether I'm going to claim an unnecessary amount. So I think the nice thing about peer-to-peer is that it returns this value equation of actually costing the insurance less, but also actually, you know, giving you effectively a better deal, because the less overall, you know, claims there are, obviously the more competitive my insurance can be. And the problem is this industry is broken because we have no empathy-driven relationship with the insurance company, right? We talk to them once a year when we want to claim. We kind of are afraid already that it's not being covered. So that's I think the real potential of P2P.
Any thoughts on P2P, or do you want to skip?
Yeah, I think you briefly mentioned there that the original mutual idea. So like insurance hundreds of years ago started as the idea of like grouping risks together and like insuring each other, right? So
London, yeah.
It's just coming back to the same original right thought, and but technology will help us to make that easier to manage. So imagine you have like you basically have all of your co-insured people on the Facebook, and everyone can share like, oh, I went to this doctor, do you think this was good? No, I don't think so. Hey, do you think this would be covered? So a lot more of like a social web inside the insured people. In Germany we have a good example for this, is called Friendsurance. And it basically, you sign up with your friends, and then they pool you with other friends and so on. And it's quite popular, and it's also backed by Lin Kwai Fung in Hong Kong. So the guys from Hong Kong already realized, oh, it's coming back to the old mutual model. Hey, let's back those guys. In Germany, why would they do that? But I think, yeah, it's the right way. So in terms of opportunities for startups, right? If startups in the room, I'm not sure, but so on the one side, from an insurer perspective, looking for startups that can bring certain modules similar to the fintech space, like fix certain issues in the business. For example, process the claims faster with something like ClaimD, or get more users into the direct channel with something like Rapid Finance, or do other things. So this is, from an insurer perspective, go out there and look for all the solutions that can help to fix the problem, right?
So would you then argue, that is the point, the next question would be, in fintech we have seen the unbundling of the last like 10 years, you know, it's a very famous screenshot of the Wells Fargo website where hundreds of startups have been taking in different kind of pockets of the Wells Fargo bank and making it better, more efficient. Would you argue something similar is happening right now in insurance, where it's about unbundling, and now, like in fintech, now it's about rebundling again, but rebundling in a very different way? Is it now that startups are quicker than insurance companies, and
I think
at
that
some point insurance companies catch up and rebundle, or what's...
So actually the underlying tech is no competitive advantage, right? So it's like Google Mail, right? So everyone can use Google Mail, but then ultimately it's what you do with Google Mail that makes the difference. And the same should be in insurance tech and fintech and everywhere. The platform needs to be specialist startups that I focus on risk assessment, I focus on this and this topic, and I'm the best in this little part of the business, and then I roll that as a platform to all insurers or to all banks. But then it's up to the insurer again to come up with the right product, how to deal with, how on top of this modular platform. And I think startups cannot be the guys that, unless you have a lot of funding, to really go out there and crack this market and change the structure entirely, but they can enable the whole market to become more efficient and thereby make a B2B business.
Actually, insurance is a very specific need. But the problem is that you don't really care about what's the name or the category of your type of insurance. You just want to be covered. So in this case, I disagree from a customer point of view. Customers want a one-stop shop for insurance. They actually want one idea, And they don't care if it's a travel insurance or a life insurance or a health insurance, particularly in Thailand. People don't necessarily associate these different policies as different policies. Like products are stories, right? They're imaginations. Nobody says that a product is a product. The customer, as we know, defines your product. So the customer doesn't necessarily care what type of insurance it is. You know, the regulator might care, the insurance companies care. But the customer actually just wants this one portal where they can get anything covered. And this is the example of tryb, right? Tryb is basically like you take a picture of something, it's insured. Whether this is a goods insurance or a household insurance or any other type of insurance, people don't care. Like, doesn't matter to them.
But here's another thought. What if you move away from insurance a bit? So if you, in China, you use WeChat, and my mom travels from, let's say, Beijing to Mongolia on a train, I can send her a sticker on WeChat, which can be then claimed at a doctor, and if something happens to her. There's no word of insurance. There's never actually the mention of insurance, but actually it's an insurance. So what is happening in the future where maybe the entire word insurance is completely moving away from the way insurance, and we have an ecosystem where we move in Google and others, where something like an insurance will be there, but will not be anymore called insurance.
It's very interesting because insurers are currently trying to to sort of infuse meaningful services into insurance products and services and policies. But that's the wrong approach. The actual approach is to take already meaningful services that people use and infuse them with insurance. Because insurance is not the main show, it's only a sideshow. And to be fair, you don't really want to think about insurance, you just want to make sure that when you need it, it's there. So WeChat is great as in being your digital one-stop shop life in China. And what they've done is also with the Young Power, right, kind of sending virtual red packets. They've actually demonstrated that if you make financial services very seamless in your chat experience, people are very happy to use that. All they do is, they know I want X financial service, they just search for it, they probably know the brand as well, and then they basically buy it. And the sticker example is you piggyback on people's existing behavior. And then you simply add a level of functionality that wasn't existing yet. If you've ever filled out an insurance form, I'm sure that you would agree that it does not piggyback on natural or intuitive behavior. It's very complicated. And that's also the reason why disintermediation, as we call it, you know, taking insurance fully online, is difficult right now because you're so used to your agent navigating you through this sea of complexity. And that's really interesting. Like, unless we make insurance as simple as sending a sticker, as you just put it, it's going to be very difficult to change the way that it's currently sold and distributed.
Very interesting. Very interesting. What would you recommend InsurTech startup how to go forward? I mean, you worked with BTS, which helped you a lot to do certain top-down innovation, I would say. Started with bottom-up, but becoming top-down. What's the best way forward? I mean, in FinTech, you can see B2C moving into B2B completely. What's happening? What would you recommend as one of the last questions here?
I mean, we are also searching for insurance tech startups because as every company's development team is always the bottleneck. So we are really interested in like finding partners and we are also already talking to many like ClaimD, like Stock Raiders, like Wikipo, like all our FinTech and InsurTech friends, because we are all friends focusing on different parts of the ecosystem. And so, but the relation with the big guys like Furia, Tipaya, Sinman Kong, they are built on trust to different parts of the market. So maybe one guy has a very good relation with this insurer and I have a very good relation with Furia and then this guy has this. Then we can basically help each other and also get the entire industry moving faster.
So it's about rebundling then?
It's about working together, to be honest. In
synergies.
Yeah, because the main issue as a B2B, as you know, in Thai market is it takes a long time to build a relation, and then it takes an even longer time to get a decision. So if you have someone that can take you in an existing relation as a startup, that will be a day and night decision, and that will be the difference between you running out of money or you actually getting money in time.
Okay. One last thing on this. Think about the startups that have really are killing it right now. What they're building is a trusted intermediary between people who want a consumer service and people who can offer that service. The only kind of recommendation for an InsurTech startup is be that trusted intermediary. Whether it's a trusted intermediary between the uninsured and the insurer, whether it's a trusted intermediary that simply allows you to, let's say, have simple coverage and know that when you need it, it's there. It's basically about building this intermediary so that people can trust perhaps a new way of doing things. And simplification is one element, but you can probably think of many more that invite trust. And this slowly transitions people from the very human-intensive insurance industry to one that is more automated, and that benefits effectively a lot of people.
So I have an option now to either talk about regulation or talk about IoT. What do you prefer? We can talk about the famous R word, regulation, or we can talk about IoT.
Both are very exciting.
Let's talk quickly about regulation, because we talk about trust, and I think it's important to understand, would regulation adopt or adjust itself? Right? Regulation is always a big topic in finance and insurance. How this regulation would adjust itself to allow this trust that you're talking about? Is it necessary, or can it happen without?
The interesting thing is, right, that regulators will probably change their role, right? And they were conceived in a world where there was no readily available information and customers couldn't be as educated as they are today. Now, they are currently still in this world of, insurance products are this, and we're protecting the customer from insurance companies coming up with new stuff. But effectively, insurtechs will be pushing radical new innovations that have nothing to do with an existing insurance product, and they don't fit the mold. So the challenge for regulators is really to say, if we want our industry to become more customer focused, if that's really our interest, then how can we keep sticking to existing rules and regulations? Example is, the regulator has very different regulations for a life insurance contract than they do for a non-life insurance contract. Both may offer you a type of health insurance. So again, the customer doesn't really see a major difference, but the regulator makes a very clear cut. It's a different license. So the challenge I see is that regulators still think very much in a product-driven, status quo mindset. And even if the insurers were to try, and they are, by the way, trying to reimagine from the ground up insurance products, the regulator in the end will still go like, yeah, but why do we want to do a day product or a 10-day product? Traditionally in life insurance, it's 10 years, 20 years. So there's a level of resistance also, because maybe regulators are not sure what they're going to do with this.
They're not sure in insurance. What's your kind of contact with regulators here? What's been your interaction like?
I mean, we talk to the regulator almost, I think, on a weekly basis. And,
exciting.
And we have a very good relation, and the line of thought is, yes, they want more competition in the market, because from my perspective, ultimately a regulator is there to regulate fair market competition. And if there's enough competition in the market, then the products find themselves, and you don't need to regulate, and you don't need to have a 3-4 months approval process until you can launch a new product into this market, which right now is one of the issues. So I agree with what has been said, and I think the role of the regulator becomes more like a referee on the playing field, but the players need to play and make it less regulated.
So giving people the benefit of the doubt, right? Rather than requiring everyone to go through the security check, basically just letting people, launch their products and only regulating when there's a negative effect.
In Singapore, basically. In Singapore, you can launch any product anytime and bundle anything with whatever, because someone else will compete you on the price in next week, and since everything can move so fast, it's always balancing out, and everyone is playing in the market, and it works, right? And Malaysia is opening up, deregulating the motor market. Thailand is next, and I think that will be a major challenge for this market because of the current way things are done.
Great. Let's end on a high. If I would give you right now $5 million, what kind of company would you start right now?
Okay.
Yeah.
So
I don't have $5 million, but what if I would give you $5 million?
You don't?
Yeah, no. Sorry.
Okay. Right. So if you did, it's basically a company that gives you full control over what kind of coverage you want. Say, I want a life insurance for 2 days. Insurance are going to say, oh, anti-selection doesn't work. Or I want a health insurance for 3 days for this country. Or I want to insure my piano. Or I want to insure my pet. It's basically one interface. I just say, I want to insure this. And then I just get a quote, and it's one click, and it's done. That is tryb, but for health, life, travel, motor, whatever it is. If you can build that, and mind you, it's extremely difficult to build, that would be a tremendous thing to do.
Great pitch. Yeah. How about you?
Yeah, I think.
Apart from Rabbit, obviously.
Okay. No, I think we need to get to the uninsured, and I would build a company that can basically be present in every village in some sort of technologistic way, and give people the basic life, basic health, and basic accident coverage in a very micro insurance kind of way. And so far, no one has really figured that one out. I think it's a good purpose.
Great. Are there any questions from the floor for these beautiful gentlemen from Germany? Yeah, Scott Bales, obviously. I'll repeat for you otherwise, yeah.
Which means if you look at life, health, motor, the biggest factors on pricing are postcode, date of birth, and stuff. We live in a world where there's more data points than that. When are we going to see actual pricing models that take into account either A, more data points, or B, actually real-time data as well, the fact that things change every time.
The question was, when do we see more pricing models that actually take all the data in that we're having now these days?
This goes to the actual manufacturers of products, which are the ones that take the risk. At the moment, there are basically people working on real-time underwriting. It's a very, very big to-do. So if you want to build a startup on that, I'm sure that you can sell it for more than probably get a lot of funding for that. But the reason it's difficult is because, again, you go into the regulator, you get into other people who say, like, the more data you have, the more risk you have. But ultimately, the nice thing about insurance is that there really isn't anything that is even close to what you say, Scott, dynamic and kind of, factoring in all this information. And the other problem is correlation isn't, and coincidence are different things. So just because you know someone's social media, just because you know what someone's doing, it's not necessarily going to be, a better risk. So basically, insurers need to figure out, does this information always add value? And they need to figure out, how can I reliably assess that doing action X actually leads to more risk? That is the billion-dollar, probably trillion-dollar question in insurance. And that's a great B2B business to build, possibly.
One quick question from Shankar. Yeah, probably on AI. Yeah. Say again? Emotional quotient. Yeah.
I mean, that's an extremely interesting take, because if you take a 1 year or a 10-year tenure, it's perfectly understandable. The nice thing about insurance is people are actually willing to pay for it. Like, people share Spotify subscriptions, but for insurance, people get that it's valuable. If it were for 1 day, fair enough. And the biggest problem right now is we haven't figured out how to take insurance fully online. Even the insurtechs that are out there, they do mainly telesales, right? That's the way they sell, even commodity insurance. So the problem is that unless you can humanize the technology so that people actually really feel that connection, there's going to be a bit of a runway. But the other reason people go with an agent is because they can blame them if it doesn't work out. So there is this, the agent is the insurance in a way. That he's kind of, you can blame him, you can hedge against him. So the emotional part is surely true, but as you know, most people are hard sold by agents anyway. So I think there is some potential. The more overkill you'll get in terms of your sale, that people will actually start turning to more neutral media, because maybe they can still build that relationship. But it's not going to be easy.
Thanks, you too. I think you can take a beer outside and have a talk about this.
Yeah,
you too.
sure.
Yeah. Take it offline. Thanks for the chat, gentlemen. Round of applause for Philipp and Johannes. Thank you.
Thank you.